Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 31st of March, 2020, which means April is right around the corner. Finally. All right, so let's talk about where the markets are and this potential pivot point for the indices and some leading stocks. Starting off the video, we're taking a look at some of the titans of tech, or the monsters of tech, including Facebook, Amazon, Netflix, and Google. What we're talking about here is this oversold retracement or bounce or reaction against the main sell swing that took us 1, 2, 3 weeks to the downside. So we're comparing where these main stocks are and of course the index themselves. So looking at Facebook, we had this big sell swing from 220 per share all the way to 140. Numbers won't matter that much. It's the pattern. So for example, Facebook made significant new lows underneath these 2019 pivots, which is about 170 per share. Amazon had a massive support level and really a rectangle between 1700 and 1800 per share, and the breakout took it above, remember this, not too long ago, a 2200 level, that's per share, and that took us from 2200 down to 17, also breaking the support lows from 2019. On Google, we can see that it's traded backwards here, had its support levels at roughly 1200 and 1000. And the late part of 2019 into just a few weeks ago took Google shares above 1500 and then straight down. So Google also took out the lows, which is right here, a pivot point at 1000 per share. But there's one anomaly. That anomaly is Netflix. And to me, I don't want to put too much logic in this, but it does make sense that if states are quarantining and locking down their citizens, they're gonna watch Netflix. So maybe that makes sense. Maybe people are subscribing or resubscribing. I don't know. But the main thing is that Netflix shares are resilient. And they're resilient in two ways. Number one, they didn't break their 2019 low. So they fell from roughly 375, bouncing off 300. And that was a good target to the downside, just filling out the range. And this range has been there, we'll see in a moment, for quite some time. So really, I don't want to say it's as if nothing happened to Netflix, but given this fall from 375 to 300 and back again, that's sort of how the range is playing out. So we'll focus on Netflix. Let's go ahead and transition to our daily charts. And well, again, Netflix is on display. So we'll pull the perspective back to the weekly and see where these levels come from. With the exception of that right there, we do see 260 and 375 have been major weekly pivot points. So again, the most recent trade, we even discussed this one not too long ago, well, a few weeks ago, was shorting into the 375, 380 level. That will be put spreads, put plays, or call premium sold above 400. And no, we can't predict the pandemic, but in terms of trading ranges, Netflix was one of those ranges. And that took it down to the target at 300 and then right back again. So that's one of the stocks that are strong, getting stronger and ultimately playing within the trading range. Now, let's take a look at the S&P and what's going on there. In last Thursday's video, we talked about the EMA Smackdown, specifically the 20-day EMA Smackdown, which is right here. As of now, that has overlaid with Don's 2626 S&P gravity point. And that remains our pivot point. So the other point of the video is to talk about the pivot. And this is it. So these stocks, at their 20-day exponential average, it does provide a short sell opportunity. It does provide areas to get short, or we would say long put premium, either puts, we prefer put spreads, in-out spreads, or verticals, playing down for 2400, 23, or maybe if you feel ambitious, a new price low. And that will be similar to this. 1, 2, 3, 4, 5, 6 days to the downside, bang, 3, 4 days to the upside, and I like to target, as in structure spreads, to the prior low, and not necessarily beyond them, because it tends to work out better that way. That's going to be out 2200 or 2300, depending on how you want to structure out spreads. And the same logic will take place in the SPY. And why we like spreads is because it doesn't mean we're predicting the future. So by putting on a spread here into a 262 or similar level, which plays into the gravity spots, 2626, and that's going to be a good spot that if the market does break, it's going to break hard to the upside. So it's a way to take a directional play without putting on too much risk, and spreads can do that if you structure them out to the downside. But again, caution protection is going to be above 265 in case the market breaks, and then plays up to the 50-day moving average. But right now, we're going to just use that as a pivot, talk about the volume divergence. It might look a little better on a 4-hour chart, maybe even an hourly chart, as we see volume metrics come down when price goes to the upside. So that's what we're looking at there. It's just a retracement flag pattern, and that puts the pivot point for all of us on an intraday basis or swing basis, purchasing puts, purchasing spreads, maybe even trying out some butterflies to the downside, which isn't much different than these little flag trades from before. On the NASDAQ, we'll take a look at it. Not much different. You're still seeing volume divergences. Your key pivot is 8,000. And that NASDAQ is just a little bit above our 20-day EMA smackdown. So that's 8,000 for the NASDAQ. In the Dow Mini Futures, smack occurring, and that smackdown's occurring about 22,500. If you trade the Russell or follow along, it still remains the weakest market. It hasn't even touched that 20-day exponential. And we can take a look at leading stocks. We've seen some of the others like Carnival Cruise Ships or some of the casinos have also bounced strongly, rapidly, powerfully up to their 20-day moving average, and the logic continues. So trade is just a way to put the risk or manage the risk and play for a pivot point or turning point. Right now, I would still focus on that 2626 rough level and your 20-day exponential in leading stocks. And if this starts to break to the upside, that's going to be our first clue. The market probably goes a little bit higher than I think most of us might like it to. And that would pierce up to 2,700, probably as this 50 comes down and meets at the 2811 gravity spot. So we have an upside, we'll call it the alternate thesis, unexpected bigger move. But until then, and we don't know the future, with the volume, with some internals, and of course this overhead resistance and supply, that does tilt our opinion to the downside, to the bear side. And therefore we'll structure trades however you see fit. If you are an intraday trader, lean to the intraday flags, intraday sell positions, intraday puts. If you're more in the bigger picture, same type of logic, but put the trade on and let the market play the next swing, which does target the prior lows. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for March 31st, 2020.